The topic of my case study I'm sharing for all of you folks is on the Magnificent Seven stocks. Okay, how I intend to trade the Magnificent Seven stocks. Now, the Mag, okay, so the focus is as so these are the three focus for tonight. What are the stocks that I think are suitable for us, and what I think are risky, and what I will avoid? What option strategies to use? Whether sell put is still the predominant, and what to do if you get a sign. All right. So which are the Magnificent Seven stocks? I mean, it's been talked about, but in case you're not aware, this is okay. Let me just make sure I have the recording. Yes, it's still on. Okay, so the Magnificent Seven stocks. These are the Magnificent Seven stocks. Your Apple in alphabetical order. It's Apple, Amazon, Google, Meta, Nvidia, Microsoft, and Tesla. Last but not least, Tesla. Okay. Now, so these are the so-called performance of this Magnificent. But why is the Magnificent Seven stock significant in this sense? These are the seven stocks that have accounted for the 20% growth in S&P alone for the past 1 year. Just seven stocks. Okay. And some of these seven stocks are already $1 trillion market cap companies. Microsoft is $1 trillion, Nvidia is $1 trillion, Apple is $1 trillion, Amazon, I think not yet, but getting there. Meta, I believe, is getting there too. Alphabet also. So these seven stocks alone account for 20% of the S&P 500 outsized performance in the last year alone. So what does it tell us? It tells us that there's concentration risk. Okay, but then to answer the first question, so is it then safe? Is it still worthwhile considering investing in all of these seven stocks? My answer is still invest, but not in all seven. Okay, you got to look at your own risk profile. What is your own risk tolerance, and then decide which of these seven stocks. It can be one, it can be two, it can be a few. But for me, it won't be all seven. For me, it's very clear. Nvidia is totally out because it's inching closer and closer to $1,000 a share. It is too high a price, and if you match it against what is the PE multiples, it's it's it is way overvalued. So I will avoid Nvidia. Interestingly, if you look at Tesla, okay, Tesla, it I would actually invest in Tesla. For myself, I would also consider very seriously investing in Alphabet. Later on, you'll see that the stock price of Tesla and Alphabet are actually in today's context still quite reasonable. I mean, it's not cheap, but it's reasonable, right? So let's go on. Okay, so very quickly, I'm not going to go into very, very detailed analysis. For those of us who have just started your options investing journey, so you know that I've been emphasizing a lot on using doing monthly trades, right? Okay, so if we're the focus or the emphasis of today's is mastermind is really to place trade for April expiry. The next expiry is 19th or 20 is on the 19th of April. Okay, so to go for April expiry and taking into account that some of these stocks are very, very expensive as part of Magnificent Seven. So what do we do? These are the three stocks that I would, if I were to be starting on my own options investing journey. I'm a newbie, I'm a beginner, right? I'll focus on these three. But out of these three, I'll choose two. Okay, I'll choose two. Number one, I'll choose Google. Number two, I'll choose Amazon. And number three, in no specific order. Out of these three, I personally would choose Google and Amazon just for one simple reason. The price of Amazon and Google are still quite reasonable. Microsoft today is about 400, is more than $400 a share. Google is 100 and 140, 140-ish. Okay. Amazon is also in the 100 plus region. So still in the affordability range. So that's for April expiration. Okay, let's move on. Let me now, and you folks also remember I mentioned about do only three trades, right? So the remaining slot do what? So we want to avoid concentration risk. We want to avoid putting everything in technology. So perhaps for the third option trade, you may want to do something else, non pure tech. Although arguably you can also say PayPal is also tech, but we can also say PayPal is also in the finance space. Okay, so that's something to as a way to diversify our risk a little bit. Bunch is a food company. This kind of business I like. Humans, anything to do with human needs, medicine, food, healthcare. As long as you are human, we cannot run away from all this. So, as a business, it will always be there. There's always continuity. So, as a food business company, this one is confirmed. Sure, will have revenue coming in. So I will consider doing BG, or I can do also Calmain, right? Or if I want to, I want to also do something else. Finance is also something that is unavoidable as long as as long as there's a as long as human society continues to exist. Finance is something that we cannot run away from. So also something for us to consider. So choose one of these for your third trade, for third monthly trade. Okay. Now, for those of us who have already, gone on to your options investing journey, if you think you are already prepared or ready to advance into weeklies, or you want to sell options on a weekly basis, I would say okay, so you can try. And for those of you who are doing monthly, no, not monthly, paper trades, paper money, sorry, not monthly, paper money, right? So sorry, it's not the 19th April, it's 22nd of April, 22nd April expiry. Okay, so if you're talking about weekly, this would be, let me just move this away. I want to get can't get the can't seem to get the okay, got it. Okay, so this one will not be 22nd. The monthly expiry is 22nd April. The immediate weekly expiry is this coming Friday, 22nd March.
Sorry, Johnson and Kelly, I think you have accidentally unmuted yourself. Can I just trouble you all to mute back? Thank you so much. Johnson and Kelly, thank you so much.
Let me see if I can do it for them. Okay, I muted Kelly. Johnson. Johnson is really muted. Okay. Okay, so all right, so if you're doing weekly trades, this will be no, strike that. It's two. Initially I put in Nvidia, but as I was doing my final notes check just before this, I realized that the Federal Open Market Committee, which is the Fed uh, monthly or the bi-monthly meeting, is happening tomorrow and Wednesday. So this is the important meeting where the Fed Reserve is going to come together to decide what is the direction, what is the strategy moving forward. Are they going to increase rates? Are they going to keep rates? Are they going to decrease rates? So in view of this happening, I have decided that I'm not going to recommend NVIDIA weekly trade, although that was my original intent or original plan to suggest that maybe for this week you can try to sell puts at around this kind of strike price. But given that I am postulating, I'm predicting that the Federal Reserve is not going to reduce or lower the Fed interest rates. So when that happens, there is a chance that the market will react by dropping down. And if and with Nvidia at this current high, if it drops down, it will be quite painful. And if we have any naked puts, we are kind of putting ourselves in a very risky position. So I decided just focus on these two, Google and Tesla. Con- we can still sell naked puts on Google and Tesla, and we try to sell as far out of the market as possible. Like for Google, we can sell around this kind of strike. Tesla, we can sell around this kind of strike. Okay, so we try to give ourselves as big a margin of safety as possible, sell as far away as possible for this weekly trade, weekly option trade. Okay, let me just move on. Okay, now something that I'd like to leave you folks with. This is my own interpretation of what the market is. What signs the market is showing. What does it mean for us? Number one, the fear index or the VIX index. For those of you who are familiar with the US stock market, right, there is this VIX, which is an indication of what is the level of fear in the market. The VIX in risk since last Thursday seems to show signs of going up. So I believe this is in anticipation of the FOMC. Today is only Monday, 18, but even before the market opened, we're already seeing that the VIX is actually trying to climb up. So this is probably my my guess is it's probably anticipation of the market, and the market is perception, the market's guess is Jerome Powell is not going to reduce the rates, and this is going to negatively impact on the market. So the fear is that there's going to be adverse impact on the market. So the VIX is going up. So this when the VIX is going up across the board, you will see stock prices drop and all that. So we just want to be very sure. Even though let's say if it turn out to be wrong, at least we're safe lah, right? Warning sign number two, and this is in relation to what I mentioned about the VIX. Okay, tomorrow and Wednesday, will the Fed? What is the likelihood that the Fed will drop rates? Don't know. Okay, we're not the Fed. Anyway, the Fed is not obliged to so-called meet the expectation of the market. The market wants the Fed to drop rates. The Fed says, "I decide, not you decide." Okay. So my own take is this likely to maintain rates. Okay, which is what some of these market analysts are already saying. A hawkish tone could impact the market negatively. And warning sign number three, we already said that, okay, there is already a concentration. I talked about this early on. It doesn't mean we cannot invest, but I would say be very selective. Number one, I'll choose this. Number two, I'll choose this. And perhaps we can also consider Amazon. Okay. So with that, that is a short and sweet take of what I what will be the focus I have for this month's monthly mastermind edition.